The price of ADA has increased by a multiple of in excess of 75 to 1 from the low point of the last year to the current level. And with gains like that, it's simply undeniable to say that we are not in a bull run in this crypto and in the wider market as well. But the question isn't whether or not we are in a bull run, it's how far the price is likely to go before the next bear market, which will eventually happen. But the million-dollar question which determines the answer to whether or not right now is a good time to be buying ADA is how far this thing is likely to go. 75 to 1 is a huge gain, and it's completely understandable as to why a lot of people will look at this gain and think that they have completely missed out. And to a certain extent they have, as it's almost impossible for the price of ADA to have the same gain in the coming year as we have had in the last year. Back then we started out at just below 3 cents per unit, and only needed to reach the current price level of around $2.35 to reach a gain of around 75 to 1. But to experience another 75 to 1 gain in the next year, we'd need to reach a price point of around $176 per unit, which would equate to a market capitalization of over $5.5 trillion, which when put into perspective means that ADA would be worth more than the entire market values of Amazon, Apple and Tesla combined, which is unrealistic to say the least. But having said that, and while again to an extent people who haven't invested yet have missed out on what are sure to be the best gains, there still may be a lot of room for growth over the coming year as well. The price will almost surely not rise by anything like 75 to 1, but a gain of 2 or 3 or 4 or even more to 1 may well be possible, and remember that we have to consider the alternatives which are available to the investor as well, and that is the primary method for establishing valuation. Also, if you're enjoying the video so far, be sure to subscribe as we have a lot more content like this out every week. Anyway, right now a lot of people are comparing the current state of the crypto market to the dot-com bubble of the late 1990s. And I have to say, in the interest of being objective on this, there are certain parallels. For example, the incredible euphoria and the number of new people coming into the market over the last year, and also the kind of no price is too high mentality. But there are also significant differences as well, differences which in certain respects make crypto nothing like the dot-com bubble. For example, back then at the peak, the S&P 500 was yielding around 2% per year, whereas 10-year Treasury bonds, which were guaranteed to be paid by the Federal Reserve, were yielding at least 5%, meaning that you could get more than double the return from a fixed-income government bond, guaranteed to be paid by the United States government, than by buying businesses, which always have a risk of losing value or going bust. And so clearly at the peak of the dot-com bubble, things did not make any sense, and there was a clear basis for a substantial correction, which of course did follow. But right now the 10-year Federal Reserve bond is yielding around 1.6%, which is actually lower than the Federal Reserve's own target rate of inflation of 2%, meaning that the Federal Reserve are on the one hand offering an interest rate of 1.6% for a 10-year maturity bond, and then on the other hand saying that they intend to devalue the currency which the bond is held in by no less than 2% per year. They're basically telling us that we will lose money in real terms if we buy their bonds. And what this means is that there is no clear alternative to the stock market or crypto. Most people don't have the expertise or the money to get into real estate, and they don't want the responsibility of property management either. And the only other alternative to the bond is the stock market and others like commodities and now crypto as well. And so on the one hand I do see why people are calling a bubble in crypto and in ADA particularly. But then again, ADA has a fixed supply under a growing blockchain platform, meaning that they can produce an income and are non-inflationary in nature. And so if I were to sell my ADA today with the gains that I have, what would I do with the money? Personally, I'm a real estate or property investor here in the UK, and I could buy a property, but that market is also out of control, and anything worth buying is going way over what I would think to be a fair value. And in the stock market, we have all of the technology companies selling at 100 times earnings, sometimes more, and so the opportunities outside of crypto are pretty lousy. And even inside of the crypto market, if not ADA, then who on a risk-adjusted basis will offer a better prospect of capital growth and income? And in my view there are only a few projects out there like this, and I already own a fair amount of each. As an investor, I see my job as trying to get the best possible return while minimizing risk. And first of all, that means that I invest across a number of asset classes, crypto being one of them, and then getting the best return that I can while considering and being mindful of how much risk that I am taking on by owning an investment. And so if one of my holdings is earning 5% and the other 2%, generally unless I have a really good reason not to, I will sell part or even all of the 2% investment to buy the one yielding more. but I'm still holding ADA because I don't see anything better or even as good, which I don't already own in my view. And I feel as if the available alternatives and choices are a significant limiting factor in investing at the moment. Anyway, that's all for this video. If you enjoyed and you'd like to see more content like this, then be sure to subscribe to our channel, and thanks for watching.